60. That's how many co-sponsors the United States Senate found this week for a bill to sanction Russia. 60 senators, both parties, signed on to it. It's headed for a floor vote as early as this coming week. 60 is also the number they need for the other bill, the market structure bill, the one that decides in law, in writing, whether the Bitcoin you think you own is actually a coin or a receipt for a coin somebody else is holding. They don't have 60. Galaxy Digital's head of research counted the votes on Friday. He got to 50. And here's the part that didn't make the evening news. 4 days before the Senate lined up that Russia vote, Russia's own parliament passed a law making Bitcoin legal property. So that's where we are. The Senate is preparing to sanction a country that just legalized the thing the Senate can't pass a law about. You're watching the wrong country. 3 of them moved in the last 2 weeks. Ours didn't. And by the end of this, I'm going to show you a single number, a reserve number, from a central bank you probably never think about, that explains why all 3 of them moved at the same time. Now, I want to be clear about the category of what we're looking at, because I'm not going to make you wait 20 minutes for the shape of it. Every one of these 4 governments is writing rules right now. Russia, Japan, Taiwan, Europe. And not one of them, not one, is writing a rule about Bitcoin. They're all writing rules about the person standing between you and it. That's the whole story. That's what this video is. And the reason it matters to your money is that the person standing between you and your Bitcoin is the only part of this that a government can actually reach. I put together a one-page walkthrough on this, the 5 ways a person can hold Bitcoin, and who legally owns it in each one. It's at timtalksfinance.com. I'll point you back to it at the end, but if you'd rather have it open while you watch, go grab it now. Thursday afternoon, reporters caught the Senate Majority Leader in the hallway and asked him about the Clarity Act. Here's exactly what John Thune said, word for word. "I would like to at least get clarity started. We'll see where the votes are." That is not the language of a man who thinks a bill is passing. That's the language of a man setting up an explanation for why it didn't. Now, 9 days before that, on July 14th, the same leader told Bloomberg government the vote would happen before the August recess. His words were, "It'll happen this work period." And a lot of channels are still running that one. They're running a 9-day-old quote as breaking news. I'm not going to do that to you. Both statements are real. The second one replaced the first one. As of Thursday, the man who controls the floor does not expect it to pass. Here's the arithmetic. Galaxy Digital's research desk cut the odds of this bill passing in 2026 from 50% down to 30. Their count? About 50 reliable Republican votes. Senators Hawley and Paul are expected to vote no. Senator McConnell hasn't cast a vote since he was hospitalized in June. 60 is the number to break a filibuster. 50 is where they are. Which puts the entire thing in the hands of 7 Democrats who've been negotiating the text and who said last week the text falls short. Not no, falls short. There's a difference, and I'll come back to it. And there's a clock. Galaxy's note says lawmakers need an agreement by July 30th to have enough floor time before the break. That's Thursday. After that, the Senate goes home, comes back for about 3 weeks in September, and then everybody's running for re-election. And I should tell you why that Russia bill has the momentum this one doesn't. Because it isn't only politics. Senator Lindsey Graham died earlier this month. 71 years old, an aortic dissection, a tear in the main artery from the heart. He'd spent the better part of 2 years pushing a Russia sanctions bill that never got a floor vote. His colleagues renamed it after him, and it picked up 60 co-sponsors inside a week. The governor of South Carolina appointed Graham's younger sister, Darlene Graham Nordone, to serve out the term. Graham had taken legal guardianship of her when she was 13, after both their parents died inside 15 months of each other. She was sworn in the same week. The seat stayed Republican, which matters because a lot of the vote count math you'll see floating around online is still running on the old number. So one bill in that chamber has a dead senator's name on it, and 60 signatures. The other one has a deadline and 50 votes. That's the room. So let me tell you why I'm spending 4 minutes of a Bitcoin video on a Senate whip count. Because this bill is not an abstraction. In the last video, we walked through how the Bitcoin that most Americans own actually sits in an omnibus account at a custodian with a fund company's name on it and your name on a spreadsheet inside it. You own a share. You don't own a coin. Clarity is the bill that writes down the rules for that arrangement. Who supervises it? What the custodian has to hold? What happens in a bankruptcy? Whether your coin is bankruptcy remote or whether it's on somebody's balance sheet when the music stops. That's not a crypto policy story, that's a property story. And the Senate just told you it's going to be a while. Which would be a discouraging place to end a video, except that while our Senate was counting to 50, 3 other governments finished their homework. And what they actually wrote is not what the headlines said they wrote. July 21st. Russia's State Duma passed Bill number 1194918-8 in its final reading. I want to be precise here because a lot of people are saying Russia legalized Bitcoin, and that is not what happened. Let me tell you what the law actually says. It classifies digital assets as property under the Russian Civil Code. Not currency, property. The ruble stays the only legal tender for anything you buy inside Russia. You cannot pay for groceries in Bitcoin in Moscow. That's still illegal. What it does allow is the part nobody's putting in the headline. Russian companies can use crypto to settle international trade. Russia has been cut off from SWIFT since 2022. SWIFT is the messaging network that moves money between banks across borders. It is not a currency. It's a permission system. And in 2022, the countries that run it took Russia's permission away. So Russia spent 4 years looking for a settlement rail that nobody can switch off. And this month, in law, it named one. The rest of the bill is the part that tells you what they actually think. The Bank of Russia will license 5 categories of participant: exchanges, brokers, custodians, management companies, exchangers. Banks are barred from routing payments to unlicensed foreign platforms. Ordinary retail investors are capped at 300,000 rubles a year. That's about $3,800, buying through a licensed intermediary. Qualified investors get roughly 10 times that. Privacy coins are excluded outright on anti-money laundering grounds. Anatoly Aksakov, who chairs the Duma's Financial Markets Committee, said the point was creating legal conditions for the functioning of cryptocurrencies in the country. Read that list again. Every single restriction in it is a restriction on an intermediary. License the exchange, bar the bank, cap the retail account. Those are all rules about the door. There is not one line in that bill about a coin sitting in somebody's own wallet, because there is no mechanism to write one. Status. So you don't get this wrong at Thanksgiving, it is not law yet. The Federation Council has 14 days to approve it, then Putin has 14 days to sign. For a government-backed bill, both are considered formalities, but they haven't happened. Core provisions take effect September 1st. So the country the Senate is about to sanction spent this month building a legal rail around sanctions. Now let's go somewhere that isn't under sanctions at all and watch them do a version of the same thing. Wednesday, July 15th. Japan's Diet approved amendments to the Financial Instruments and Exchange Act and the Payment Services Act. In plain English, Japan moved crypto out of the payments rulebook and into the investment rulebook. That sounds like paperwork. It isn't. A payments framework treats the thing as money in motion, something you spend. An investment framework treats it as something you hold. Japan just moved Bitcoin from the checking account shelf to the savings shelf, in statute, and the tax followed. Japanese crypto gains were taxed as miscellaneous income at rates running as high as 55%. The new structure is a flat 20, 15 national, 5 regional. Now here is where I have to slow you down, because this is the part being misreported everywhere, and if you repeat it, you'll get corrected in your own comments. That 20% rate does not start now. It isn't expected to take effect until 2028. The broader rules take effect in 2027. Japan passed a law this month that mostly happens in 2 years. And no Japanese Bitcoin ETF was approved. None. What the law did was remove a legal obstacle. Financial Services Agency officials said Japan will now consider developing a regulatory framework for crypto ETFs. Consider. Developing. Those are the words. Anyone telling you Japan just unlocked a spot Bitcoin ETF is selling you a headline that doesn't exist. What Japan did do immediately is raise the penalty for operating unregistered from 3 years in prison to 10, and the fine from 3 million yen to 10 million. Same pattern as Russia. Softer on the asset, much harder on the intermediary. And ask why Japan, of all countries. Japan carries the heaviest government debt load in the developed world and has spent years fighting a weak currency. When a country in that position rewrites its statute to make a fixed supply asset easier for its citizens to hold and cheaper for them to hold it, that's not a technology decision, that's a savings decision. Which brings us to the third country. And this is the one with the number I promised you at the top. Because Taiwan isn't debating what its citizens should hold, it's debating what its central bank should hold. Here's the number. 597.15 billion US dollars. That's what Taiwan's central bank held at the end of June. It fell by $7.92 billion in a single month, and it dropped below 600 billion for the first time in 3 months. Why did it fall? Two reasons, and the central bank gave both on the record at its July 7th briefing. Tsai Chung-min, the Director General of their Foreign Exchange Department, goes by Eugene Tsai in English, named them. Reason one is arithmetic. Taiwan holds a pile of currencies that aren't dollars. The dollar got stronger, so that pile is worth fewer dollars when you add it up. Nothing left the building. The number just shrank. Reason two is the one that costs real money. The central bank was selling US dollars and buying Taiwan dollars, actively intervening to stop its own currency from sliding. And the reason the Taiwan dollar was sliding? The explanation, in their own briefing, runs through our Fed chair. Investors read Kevin Warsh as coming in more hawkish than expected. The Fed's dot plot projected at least one more rate hike by the end of this year. The dollar strengthened against everything as a result. Add foreign investors pulling capital gains and dividends out of Taiwan in June, and the Taiwan dollar had nowhere to go but down. Sit with that for a second. A central bank on the other side of the planet lost almost $8 billion off its reserve position in 1 month. Part of it just from the dollar going up. Part of it from spending real reserves to fight what the dollar going up was doing to them. Either way, the cause is the same. And the cause is a policy decision made in Washington that nobody in Taipei got a vote on. That is what a reserve currency actually is. Not a flag, a bill somebody else can make more of, that everyone else has to hold anyway, and that reprices their savings when a man in Washington changes his mind. Now, against that backdrop, a legislator named Ko Ju-chun, he's a KMT legislator at large, has been arguing that Taiwan should put a portion of those reserves into Bitcoin. He delivered a formal proposal built on Bitcoin Policy Institute work back on April 29th. That was months ago, not this week, and anybody telling you it just happened is padding a story. What is recent is what he said in an interview published July 15th. And I'm going to read you the whole sentence because the version going around is cut in half. He put it at an 80% chance within 5 years, or at least a very high chance within 10 years if the political conditions are right. That last clause is doing a lot of work, and the people quoting him keep leaving it off. I'm leaving it in because a forecast with its condition removed isn't a forecast, it's a slogan. So, Russia, cut off from the plumbing. Japan, drowning in debt. Taiwan, bleeding reserves to defend a currency against our Fed. 3 different problems, 3 governments reaching for the same answer. Now let me show you the one that reached for the opposite answer and what it cost them. Europe went first. MiCA, the Markets in Crypto Assets regulation, has been phasing in since 2024. Stablecoin rules went live June 30th, 2024. The exchange licensing regime went live December 30th, 2024. And you may have seen a wave of posts a few weeks ago saying, MiCA went live July 1st. That's wrong, and it's worth knowing why. July 1st, 2026 wasn't a start date, it was an expiry date, the end of the 18-month grandfathering window, and only for about 15 member states. Latvia, Hungary, the Netherlands, Poland, and Slovenia ended theirs a year earlier. Germany, Ireland, Lithuania, Austria, and Slovakia ended theirs December 31st. Same with the delisting story. You'll see Europe is delisting Tether, presented as this month's news. Coinbase delisted USDT in Europe in December 2024. Kraken, Binance, and Crypto.com all completed theirs by March 31st, 2025. That's a year and a half ago. The only genuinely current one is Revolut, which finishes August 31st this year. I'm walking you through the dates because this is where most of these videos fall apart, and because the actual result matters more than the drama. Europe's licensed firm register went from 243 before the deadline to 280 by July 4th to 294 by July 17th. That's the outcome. Europe didn't ban anything. Europe decided how many doors there would be and who gets to run one. We're about halfway. Everything up to here was the what. 4 governments, 4 decisions, 14 days. The rest is the so what, where the money actually ends up under each of these regimes, and the one thing all 4 of them left untouched. That part is where this stops being a news story and starts being about your account. And if you're already thinking, fine, but where does mine sit? That's the right question, and it's the one the walkthrough answers. 5 ways to hold it, who legally owns it in each. TimTalksFinance.com, links in the description. Takes about 2 minutes to read. Put the 4 side by side, and the pattern is impossible to miss. Russia capped what an ordinary citizen can buy through a licensed intermediary. Japan changed how gains are taxed when they move through a reporting venue. Europe licensed the exchanges, the doors. And clarity, whenever it happens, decides which American regulator supervises the broker. 4 legislatures, 4 different political systems. Not one of them wrote a rule that reaches a coin sitting in a wallet whose keys you hold. That's not because they're generous. It's because there's nothing there to regulate. There's no company to license, no office to serve papers on, no transfer agent, no omnibus account, no counterparty. A government regulates a relationship, and self-custody is the one arrangement in finance that doesn't have one. Now follow the money, because that's the point of this channel. Every path in front of you, the ETF share, the brokerage position, the exchange balance, the yield account, routes through an entity. And every entity is somewhere on somebody's licensing list. That's not a conspiracy, that's just how the plumbing is built. When you buy the ETF, you're buying a claim on a fund that holds a claim at a custodian who holds the coins. 3 layers, and your name appears on none of them. In the last video, we walked the whole path, from the app on your phone, through the broker, through the fund, to the custodian who actually has the keys. And what that walk showed is how few doors there are at the end of it. A market that looks enormous and diversified from the outside narrows down at the last step to a handful of institutions, which means the rules being written about those institutions aren't a side story, they're the only story. So look at what everything a saver owns actually is. Your dollars. Somebody can make more of them, and somebody else has to eat the consequences. That's not an opinion, that's the job description of a central bank, and Taiwan's reserve line just moved $8 billion, proving it. Your treasuries. An IOU from a borrower whose debt is the reason the currency is under pressure in the first place. Your home equity. Real, but priced in the same dollars, and mortgaged against a rate that a man in Washington resets 8 times a year. Your ETF share. A claim on a claim on a coin. Every one of those has an issuer, a person or an institution who can create more of it, reprice it, freeze it, or fail. There are 21 million Bitcoin. There will be 21 million Bitcoin. No board votes on that. No parliament amends it. Russia's Duma didn't touch it. Japan's Diet didn't touch it. Brussels didn't touch it. Our Senate can't find 60 votes to touch the brokers, let alone the protocol. That's not a prediction and it's not a price call. It's just the one line item on the list with nobody standing behind it who can make more. Which leaves the practical question. And it's the only one that actually costs you anything if you get it wrong. What do you do between now and September when none of this is settled? First, I owe you the thing I said I'd come back to the 7 Democrats. Every headline you've seen calls them the 7 no votes. They are not no votes, and the difference is the entire fate of this bill. Here are their names because vague beats sources say Angela Alsobrooks, Cory Booker, Catherine Cortez Masto, Ruben Gallego, John Hickenlooper, Mark Warner, Raphael Warnock. And here is what they actually wrote on July 22nd. Quote, key provisions, including those addressing ethics for elected officials, consumer protection, illicit finance, conflicts of interest, and market integrity, must be strengthened. Must be strengthened, not must be abandoned. And they close the statement like this, quote, we have been working in good faith with our Republican colleagues for the past year, and will continue doing so to get this over the finish line. That's a negotiating position, not a rejection, which is why the odds are 30% and not 0. But it's also why the odds are 30 and not 70. Because strengthen the ethics provisions is the single hardest thing to write into this particular bill in this particular year, and everyone in that room knows it. So 2 scenarios, no prophecy, probability, and you can weigh them yourself. Scenario 1. The 7 Democrats and the drafters find text they can live with. Maybe not by Thursday, maybe in that 3-week September window. Clarity passes. American custody rules get written properly. Segregation requirements, bankruptcy treatment, a named regulator. That's genuinely good. And it also means the default path for most Americans gets smoother, which means more people end up holding a claim instead of a coin, because the claim will be the easy option and it'll have a government stamp on it. Scenario 2. It dies. The clock runs out, the Senate goes home, the midterms swallow the fall, the vacuum stays, and the rules keep getting written by whoever's actually moving, which right now is Moscow, Tokyo, Brussels, and a legislator in Taipei with a spreadsheet. Notice that in both scenarios, the same thing is true at the end. The rules being written are about the middleman. Neither scenario reaches a coin you hold yourself. 3 signals: specific, dated, and you can check them yourself. Signal 1, Thursday, July 30th. That's the date Galaxy's desk says a text agreement has to exist for clarity to get floor time before the break. If Thursday comes and goes without an announced deal, the September window is the story, and you can stop watching the daily headlines until Labor Day. Signal 2, September 1st. Russia's core provisions take effect. Watch one thing only: whether Russian firms actually settle cross-border trade this way, or whether it stays on paper. If it gets used, every sanctioned economy on Earth has a template, and that's a bigger structural story than any bill in Washington. Signal 3, the Federation Council and the signature. 14 days each from July 21st. If both land, Russia has a crypto property law on the books while the US Senate is still counting. And separately, watch whether Taiwan's central bank says anything at all about reserve composition at its next quarterly briefing. It probably won't, but the day a central bank answers that question out loud instead of dismissing it, the conversation has moved. And the number I promised you at the start was $597 billion, down almost $8 billion in a single month, because a central bank had to sit there and absorb a decision it didn't get a vote on. That's the whole reason 3 governments moved in 14 days. Not ideology, not technology. They're all holding a reserve asset that somebody else controls, and they've all started, quietly, to ask what else there is. You're in exactly the same position they are, just with fewer zeros. The takeaway is one sentence. Every rule written this month was a rule about the middleman, and the only position with no middleman is the one you hold the keys to. Before you go, if any part of this applies to you, don't just roll on to the next video. Go get the custody walkthrough at timtalksfinance.com. 5 ways to hold Bitcoin and who legally owns it in each one on one page. It takes 2 minutes and you'll know exactly which rung you're on. Next video, I'm going after the other half of this story, the Fed chair whose name came up in a Taiwanese central bank press release, and what a genuinely hawkish Warsh does to everything you own. It's not a rates video, it's a power video. Subscribe so you catch it. I'll see you in the next one.